So, in this week's strategy update, I'm going to be talking about two big changes that are coming up. Number one that we see is the fact that there is, uh, we tend to have this tendency of looking at trends that are suitable for us, right? Though there is evidence that is overwhelmingly opposing our view, we tend to look for confirmations. We tend to look for um, data and evidence that kind of supports us. I think this is where fundamentally our approach at Helix is quite different because what we are looking at is we take the evidence on the ground, we analyze that, and we change and we learn along the way. So if your uh, investing journey involves looking at a specific theme. For example, ESG being a theme, most investors tend to look for confirmation either for or against that theme. But where we miss is really the opportunity that is available in areas that we don't look. I can give you a few examples here today as part of this session. So I'll probably look at 3M as a company. Uh, it's basically a quite a diversified manufacturing company. It's got its um, legs in healthcare, in pharmaceutical, in packaging, uh, in food, stationery. There's a wide variety of things where 3M is involved, and its environmental footprint is quite huge. We don't realize it when we basically look at it, but uh, in reality, their environmental footprint is quite huge. If you look at their uh, emissions alone, their water usage alone, we look at their waste management alone in isolation, it might actually come out as alarming. But what we have to consider is what are they doing? How is their sustainability program working over several years? So again, as I mentioned, many of the companies that we track, we look at sustainability programs that have been in place for 10 years, 15 years, 20 years in some cases. I can tell you no sustainability program is ever going to give you instant results. It takes several years of progress before we see the actual results on the ground. 3M is also a great example of that. Right? Sustainable manufacturing at the core, there are innovations that are coming in. And one of the things that I kind of look at is how they are using the principles of ecoeconomics, within the sustainable manufacturing work that they do. A good example is how they measure emissions and how they commit to it, and how they communicate this among their staff, their stakeholders, vendors, board members, various investors, etc. It's got to be simple. It's got to be easy to understand. It's got to be something that everyone can relate to. And in that area, I think 3M does a pretty good job. So this Friday, they will be releasing their earnings. We will be watching that, and we'd like to understand how they're doing in this space. One great example: if you're in the game, and if you would like to monitor these companies, please get onto the earnings call and basically listen in, ask questions, post your comments. Right? That'll be fantastic. Um, let's see. Another one. Earnings coming up on Thursday. Uh, I think I think I think the biggest area where Pepsi has a large environmental footprint is the water usage. Um, Water usage and the agricultural products that they use as part of the um, products that they deliver. So looking at that, we've been monitoring Pepsi over the last 3 years or so, and we are seeing quarter on quarter progress being made. And again, I look for quarter on quarter incremental progress rather than one big announcement or one big change basically taking place. One big change taking place, fantastic, that is great. But what is more important is that sustained progress. So yeah, we will be watching the earnings release later this week. Um, so recently, uh, there was this car crash in India, um, a plane that crashed into a building, etc. The engine manufacturer is GE. GE Aerospace will be releasing its earnings later this week. Um, it is a aerospace company. It is, I can say, manufacturing, heavy engineering sort of firm. Their innovations in fuel efficient engines and also the aviation technologies that go behind this quite relevant. So we are watching the earnings, as we go along. Again, another company that has been on our watch list for quite some time. Um, United Airlines. Um, we are looking at it primarily from the perspective around sustainable aviation fuel. I know it's an area that's always been debatable in terms of how it's been deployed in the past, etc. But uh, we are monitoring Delta, we are monitoring United, we are monitoring British Airways, Virgin Atlantic, a number of airline companies that are making changes with the way they use fuel efficiency, improvements in the uh, range of the flight itself, as well as uh, looking at how they kind of trade and manage their fuel related commitments, because oil prices are likely to be quite volatile for the rest of the year. So uh, we do look at these. Um, Another company that I'm looking at is Alcoa, um, aluminium manufacturer. They have significant stake in terms of, I would say, the global production of aluminium. And with that, what we are interested in understanding is the sort of environmental impacts related to energy consumption, related to mining of aluminium. So we'll be looking for updates on sustainable sourcing, recycling, emissions reductions, etc. From the core. Today there is Albertsons, California, Seattle, yeah, West Coast based um, retail supermarket company. They're they're pretty good with respect to supply chain sustainability. So we want to be watching this, and we want to understand whether they're making quarter on quarter progress, whether they're making any further changes to this. So we're looking at Albertsons, um, from that, just from the list of firms and such. A number of financial institutions that we track: JP Morgan, BlackRock, Citi, Wells Fargo, Bank of America, HSBC, uh, Goldman Sachs, Morgan Stanley, PNC, Citizens Financial Group, State Street, a number of financial institutions that we look at. We are not bothered with the overall scope 1, scope 2, scope 3 emissions at all. Right? We are not interested in that at all. What we are interested in is how much is their financed emission. Are they financing emissions intensive projects, or are they stepping away from that? Are they going renewable, etc.? That's the area where we are more interested in kind of understanding. The one of the things that we might have to explain over here is our fund is primarily looking at changes that are taking place in four big areas. One is food, the second is the built environment, the third is transportation, and the fourth is industrials. So if you'll see, most of the companies that we track are related to these four areas. Obviously, there is tech kind of sprinkled in as part of this. But I can't eat tech. I can't live inside tech. So if there is tech that helps me live better, then that's the tech that we'll be interested in, right? So those are the sort of firms that we are looking at this week in terms of how we are expecting the various macro events. This week, there's quite a few things that are actually coming up. The consumer price index in the US, um, the industrial production in European Union. We've got India. We're looking at basically the balance of trades. Um, in the UK tomorrow, again, consumer price index. What is happening in that, and how this can change. Um, And then what we are also interested in later this week is advanced retail sales in the US, business inventories, housing market index, uh, as well as various speeches from the Fed. So we'll be interested in looking at that. In the UK as well, there's the retail sales numbers coming up later this week. Um, at the back end of this week, there's a company called Baker Hughes Oil and Gas Consultancy. They gather data with respect to oil and gas facilities. So one of the things that we are interested in is the rig count. So how many rigs are in operation versus how many are coming up in the next few months, years, etc. Right. So and also that's important with Trump's drill baby drill kind of a stance. So are we really drilling on the ground? So that's something we'll be interested in sort of monitoring. And that's largely what we are looking at. But I also wanted to touch upon a couple of things over here before uh, we kind of look at how we are positioned and what we are doing. Um, with respect to our fund as well as the advisory activities. Now, uh, as I said, we look for evidence on the ground, and we are not going to be focused purely on gathering evidence based on a certain theme that we already pre-built. Ecoeconomics is a broad theme which kind of encompasses a number of things. Use of renewables, energy transition, sustainability at the core within uh, various companies, preservation of the natural capital. Um, age is a big determinant with respect to this because the younger generation aspires for more of a sustainable future versus a status quo preservation from the older generations. So considering intergenerational equity and how things are changing in the market, uh, we also have to acknowledge the fact that there is some irreversibility with respect to climate change, right? So while some studies seem to present the fact that if we reduced emissions today, if we did this, these various actions today, and then we limited temperature rise to certain level, etc., then everything would become hunky dory. Unfortunately, that is not the case, right? Uh, some of the environmental damages cannot be undone, and we have to live with it, right? So one of the great examples, I was actually reading about this today. In the UK, we are having hotter days and lesser number of colder nights, irreversible. Is it going to change uh, because of these actions? We can do is we can stop making it worse. That's all that we can do. Uh, and a big theme that we also look at is resource depletion and efficiency. So you cannot be efficient in allocating resources unless we tackle resource depletion. That's a fundamental stance that we take. So with this, uh, we, I'd also like to talk about some of the initiatives that we're taking. One is that we have this mechanism by which we teach um, investment advisors and solo GPs are principles of ecoeconomics, are methods of building a portfolio that delivers uncorrelated returns. So if you know of somebody who would be interested in this, just ask them to get in touch, and then we can basically get them enrolled into this program. If you know of students who are interested in running a investment strategy management internship, it's free of cost. It's an unpaid internship, but it helps them. It's typically suitable for a postgraduate student, and ideally, if they have a degree in economics or finance, it's fantastic. What they will be doing as part of this is analyzing stocks, building a portfolio, testing it in the market, and they get an opportunity to publish to our investor network. It's the same with existing investment advisors or solo GPs who want to learn the mechanism of how to generate uncorrelated returns, uncorrelated high returns with very low drawdown. Then they can come and learn this from us. Uh, we internally we use this AI system. It's not LLM. It's not generative AI or or any of that sort. It's basically a graph neural network that connects various possibilities and looks at things like money flows, uh, how the stock market moves, how the particular stock is likely to be impacted, and then it gives us many of these broad signals that we talk about, right? So this system that we use, we are also licensing this essentially for other firms to also use it. They can build their own thesis and strategy on top of the system, and they can trade um, their their strategy using our API connections. So that's also something that we have pretty much on board. We have a number of deals in the pipeline for LPs to invest into, either individual LPs or professional investors, as well as institutional investors. We've now been mandated by a US based energy company, which is bringing in uh, portable EV charging stations. So that's basically a 25 million deal. We're looking to raise capital for this. If you're interested, just let me know and I can share information about this. We have an Indian firm that's bringing in sustainable honey. Been in business for several years, highly profitable firm. Founders looking to exit. So we have an opportunity to basically to invest into this one. We have a US based healthcare firm that's into medical coding and essentially taking up the manual process right right from the point where a healthcare provider has to feed in information through to a claim itself, right? Highly profitable business, highly uh, sustainable revenue stream. So we have that, we have that business for which we are basically raising capital as well. We have a number of other deals in the pipeline. So if you're interested in any of these deals, let me know. Just ping me, and we can get in touch. Right? Those were some of the major changes and what is coming up, later this week as we speak. Uh, of course, there are signals that come up on our HDI2 trading intelligence, investment intelligence system. So if you're using the system, then please go ahead and test signals. Go ahead and uh, enter the market, with with those. Right. Thank you. Nice talking to you.